Hello from London. It has been another week of limited weekly key reversals. But the ones we have had have been interesting in their own way, and not necessarily in the way one would have intentionally or initially expected them to be. You see, these dramatic moves we've seen in some of the charts have set up larger long-term patterns, larger than, say, weekly key reversals. And this is why I think the review of actions on the 1st of April, when we can see the monthly patterns that have developed throughout March, well, I think they may prove to be the most interesting patterns to look at in recent days. Anyway, last week we had weekly key reversals down in the markets that I cover. No weekly key reversals up, I'm afraid. Thus to the currencies. We had weekly key reversal down in US dollar against the Indonesian rupiah, though I'm afraid there has been no follow through lower since then. Or to be honest, neither has there been a move higher. Everything stayed around the close of last Friday and the closely assembled moving averages nearby. In fixed income markets, we had a weekly key reversal down in US T-note futures and a reasonable follow-on lower so far this week. This move down, I suspect, may have been aided by the horn top, a variety of the double top that was made at the start of March. A similar scenario exists in German Bund futures, with a weekly key reversal down and a horn top made at the start of March. However, the difference here is that I use front month continuous charts in my analysis, and this sometimes conflicts with a specific futures month contract. However, I am happy to say I checked on the June futures contract here, and it also shows a weekly key reversal down for last week. I'd next like to look at some of the LME contracts where we had weekly key reversals down, specifically LME 3-month lead and LME 3-month tin. Now, before I go further, I would like to point out that I covered both of these in greater depth yesterday in my weekly metals commentaries. So here goes. We had a weekly key reversal down in LME 3-month lead last week. A really big one that started on Monday last week with a bullish opening white Mariposa that, because of its size, could also be seen as a shooting star pattern, type 1 bearish. And we finished last week with a bearish long black Mariposa that closed below all the moving averages bar the long moving average, currently at 2290, plus also below the big 50% Fibonacci line of the March 2021 to March 2022 move at 2304. This week we've seen a follow-on lower, such that in the last week until now, we've seen prices breach up and over the upper time, currently at 2596, and the lower time, currently 2257, of the big bullish May to October 2020 Andrews pitchfork. That has run the market higher for so long. Today we are below the long moving average and testing once again this lower time, though without any closes below it as yet. LME 3-month tin also had a weekly key reversal down last week, though to my mind a more dramatic one. Prices initially started last week by trying to break higher over the upper time of the January based and quite acute bullish shift pitchfork, currently at 49,590, and during the rest of the week breaking down below the lower time, currently at 45,950, and back into the previously broken but still seemingly effective January to March 2021 bullish shift pitchfork. Now, prices even managed to breach the lower time, currently at 4290, and close below all the moving averages bar the long moving average, which is currently at 37,285, and that was on last Wednesday. However, the market has since recovered from that excess, closing higher last Friday, but still coming under some bearish pressure as the market was unable to properly breach or close under the newly created 50% Fibonacci resistance created last week at 45,040. This week prices have headed lower, but we seem to have become entangled in the support offered by the middle time of the bullish shift pitchfork, currently at 42,675, and the rising short-medium moving average currently at 42,970. This all makes for an interesting market. What will make it yet more interesting is what happens in 3 Thursdays from now, as these big moves, as I pointed out earlier, have set the conditions for some markets to make monthly key reversals, and LME 3-month tin is one of them. If prices close on the 31st of March either over 45,105 or under 42,750, then we'd be on. Right now, we are barely looking at a monthly key reversal down in here in March, but only just. Finally, I wanted to say a few words about LME 3-month nickel. Now, I am not going into the history of what happened or what the exchange and authorities should or should not do. That is not my role, thankfully. I'm just going to look at this from a technical analysis point of view. And that is to preserve the sanctity of the price, volume and open interest data. Whilst it may be appropriate or not to remove some of the day's trading, it still leaves my daily chart with ghosts. Ghost highs with resultant ghost Fibonacci levels, to just mention a few technical indicators. To then today have issues with the price action at and under the permitted limit down move for the day further muddies the price data and makes the calculation and interpretation of market actions just so much harder. If you can hear me, please just get this fixed. No one, not even the best technician in the world, can operate with incorrect or false data. Now, I'm always happy to share my videos, various charts, and answer any questions with anyone who contacts me. And with that, I'll finish this section from London. I hope you found these comments useful.